So here we are, morning. It's just gone 8:30 on a Monday morning, overcast Monday morning in February, and I'm here to do a Q&A. What about, you may ask? About property finance. And why would I be doing that? Well, because I've been brokering for over 20 years. Everything from a simple buy-to-let to multi-million-pound development loans. And so, over that time, you get to know a bit about how property finance works. So I just jump on here every Monday morning, 8:30, and let people ask questions. So here's the deal. You ask a question about some aspect of property finance, and I'll answer. Excuse me, Batman. dear. Sorry about that. And I'll answer it. Quite a simple proposition, really, isn't it? So I see we've got a couple of people that have got him bang on the off here, and there's a couple of questions there that we're going to deal with. So while you're watching this, I'll hang around for about 30 minutes. So I say I'll be here till 9 o'clock, unless the questions keep flowing, and it keeps me here longer, and I will stay till every question's answered. Okay, so let's crack on with a couple of questions, and we'll see where we go with there. So, got a question? Put it in the chat box. So I'm coming live through YouTube and various pages and groups on Facebook. And if you're watching this live, great, good to see you here. If you're watching the replay, equally good, and good to see you here, because not everybody can catch it, live at 8:30 on a Monday morning. And if you're watching the replay, just put a hashtag replay in the comments, and I'll see that, just to let me know that you've watched the replay. Good. Okay, let's crack on. A couple of questions here. So let's move on. A few good mornings coming in there. Well, good morning to all of you. Here we go. So Segan, trust you're well. Well, I am actually. I'm pretty good, thank you. But thanks for asking. I would like to JV with an investor, but buy them out later. Yep. Okay. Understand that. How does having them on a charge on the property and then moving them off the charge later work? Yeah. Okay. Understand that. So, well, first thing is, you want to check out their credit history, because here, whether you know this or not, if you're going to do this in joint personal names, here's the risk that at some point in the future, if they haven't already, they screw up their credit history, and because you've got a mortgage together, your credit histories are interlinked. So they screw up their credit history, yours is also screwed. So, and this is a thing that you should be aware of before you go into a joint mortgage with anyone. As soon as you've got both your names on a mortgage, your details are on each other's credit files. So when one has a credit mishap, then it just rebounds on the other. So the first thing you should think about doing is, do you want to take that risk with your future credit? And if you remove them at some later stage, then you need to change the deeds, and you need to change the mortgage, and you need to get your mortgage lender's permission. So there we are. If you've got any more questions on that, follow-on questions, fire them away. And thanks for your question. So a couple more going in there. Okay, Jason, good to see you. When very similar question, strangely enough. When JVing, is it best to have one person on the mortgage and the others as financial investors, rather than two or multiple people applying for the mortgage? Well, neither's really good, Jason. That I've just explained to Sagan that the risk you run when you have a single person, a joint person on the mortgage, But having one person on the mortgage and the other as financial investors, that's problematic too, because if they're putting the money in, then one of the things, the base criteria checks that mortgage lenders underwriters do is that they ask you where the deposit's coming from. And if it's not coming from you, they'll kick out your application, because they don't allow, mortgage lenders don't allow borrowers to borrow the deposit. It's got to be your own cash. And, if you try and disguise that by sort of putting it, going around the houses with it and putting it from one account to another account, every time they see, they'll ask for your bank statements. And every time they see a lump of money drop into your account, they'll say, where'd that come from? Can you show us the bank statements for that account? So eventually they'll keep drilling down until they find the true source of the money. And when they find it's not yours, they'll kick out your application. So neither is good. And you want to question why you want a JV in the first place. Neither's a good thing. But if you want to come back with more questions, Jason, feel great. David, I've heard that a lot of lenders are only offering 80% at the moment. Is that true? No, it's not true. Not true at all. Very few lenders offer 80%. Most are offering 75%. And 80% mortgages are generally a pile of rubbish. You'd have to be pretty daft to go for an 80% mortgage. Why is that? Because they jack up the cost of it, of the rate and sometimes the arrangement fee compared to their 75% rate product. And over the term of the mortgage, you end up paying them back the 5% you borrowed. So it's a false economy. I've done a video on that, David. Let me just find that video for you. Literally said it is a few weeks ago. Let me find that and pop it in the thing. Right. Here we go. So, excuse me. So there we got why 80% mortgages generally are not worth doing. Stick with 75%. Oh, you've just popped another one in there. Sorry, you meant 70%. No, don't say that's true. 75% are 75% mortgages freely available. Yeah, don't know where you heard that. Obviously from a not very reliable source. Okay, so hopefully that helps. A few more good mornings. So good morning to other people on there. So good morning. What we got? Jason's back with another. Okay, so Jason says, I was reading Property 118 with Mark Alexander about incorporation. What happens to your mortgage when you incorporate properties under your name into a limited company? Well, it could be different issues there. Let me just deal with what you're saying. So you don't incorporate properties, you sell them. So if you own a property in your own name and you transfer it, to use a word that isn't accurate, transfer it to your limited company, then you have to sell it, pay capital gains tax and pay stamp duty, and then your limited company now assumes ownership of the property. And almost certainly you have to get a new mortgage, because the mortgage you got wasn't a limited company mortgage. It was lent to you as an individual. So you need to change your mortgage. And actually you wouldn't be able, if you didn't tell the mortgage lender that you were selling the property to your limited company, that would be a breach of their conditions. And actually they would have to know, because you'd need to get a solicitor involved for the sale, and the name on the deeds is going to change. So You might choose to do that, but it wouldn't be. It wouldn't just be a transfer. It wouldn't be about incorporation. So you don't incorporate properties under your name. You sell them. If there's something else that you're talking about there, then let me know. A few more people saying good morning. Okay. So Segan's come back with that. Just wondering what to tell the lender when I need to buy the JV off. Just so you just tell the lender that they wish to withdraw from the mortgage and from ownership of the property. Not difficult. So if you're watching this and you haven't popped a question in there yet, but you want to, okay, I'm going to be around till about 9, maybe a little bit longer. So pop your question in and I'll answer it. That's why I'm here. So there we are. Good. And thanks for the people who are putting questions in so far. That's good. Okay. Let's see if we've got any more. Okay. So well, there's no questions there at the moment. So if you want me to hang around, you better ask one. Otherwise, then I shall be shooting off. Interesting comments about this came up a couple of weeks ago, actually. A few more people saying good morning. Yeah, good morning. Good to see you. This came up. This sale and rent back issue came up a couple of weeks ago in this Q&A, and I recorded a video on that just to do that, just to highlight the situation that it's an illegal activity banned by the FCA. And we had a post in one of the groups, can't remember which one now, but I mean over 100. We had a post over the weekend, and this was a sale and rent back. They'd sold, the owner had sold the property and continued to live there as a tenant on an AST agreement. And there was an issue about the washing machine, and whose responsibility was it to buy a new washing machine? Was it the owners, current owners, or the tenants? And there are a load of people commenting and offering it. Oh, it's the landlord's responsibility, or it's the tenant's responsibility, and all this sort of thing. And the elephant in the room was it completely ignored that actually it's an illegal transaction. And I said that it's a bit akin to arranging the deck chairs on the Titanic. You're worried about who should buy a new washing machine when you've got this massive problem with an illegal transaction, and people were completely ignoring that. Well, as it happens, it turned out that it wasn't illegal because they'd actually done the transaction, I think, in about 2008, and it was sale and rent backs were legal then. It was only I think 2009 when the FCA jumped in and stopped it. Okay, so a couple of more questions coming in there. Keep them firing. If you want to keep me on here to answer questions, then fire away questions. Otherwise, I shall be getting on with my day. Normally, I'm here till well after 9, but there we are. Good. Okay, so if you've got a question and it's about property finance, pop it in the chat box and I'll answer it. And where we are. Okay, so good. Hello, Will. Good to see you. There we are. You hop on most Mondays. If my company has an SIC code for trading properties, can I still get a cross-collateral loan in your personal name? Yeah. So can you get a cross-collateral bridging loan in your personal name for use in your company? Yeah, perfectly fine. Easy to do. And we'd be very happy to do that for you when you find the right property. Pavel, there we are. Good. We've been swapping a few messages last week. Good to see you. What are the fees for bridging? Well, bridgers charge an arrangement fee, which is almost universally 2% of the loan, not the purchase price, the loan. They will also do a valuation fee. That can vary. It's a few £100, and obviously it's tiered. So, if you're buying a 50,000 property or £1 million property, you're not going to pay the same valuation fee. The more expensive property, the more they charge for the valuation. So you get a valuation fee. You're going to have to pay sort of lenders' legal fees as well. So with almost every bridger, you have your solicitor who acts for you. The bridger has their solicitor who acts for them. The two talk, but you have to pay both bills, legal bills. So that's what the fees are for bridging. Good. And how do I know that? Because I've arranged hundreds of bridging loans going back over 10 years. Yeah, we brokered literally, and that's no exaggeration, literally brokered hundreds of bridging loans. So we know pretty much how bridging loans work. Good. There we are. So a few more mornings, still more mornings. Good. Thanks very much. So second, okay. Can I remortgage or resi property to get some money out when 90%? Okay, so let me see if I've understood this correctly. You've got a main residence mortgage for the property you live in, and you're currently at 90% loan to value. Can you remortgage or get some money out? No, absolutely not. You're fully geared up in terms of loan to value, so there's nothing you can do on that. The only thing you can do is wait for your property to go up in value. Okay, David's back with another question. Thanks for your interaction there, David. Regarding answer about a JV, how each investor's credit is influenced by the other. Is this also the case if bought through a limited company with two directors? Okay, so no, it's not, because that doesn't appear on your, you're not linked on your personal credit files. But now I just want to point out, because a lot of people get this confused with directors, shareholders. Okay, directors work for the company, they're employees. Shareholders own the company. So, a company is not, the credit history of an employee of a company isn't relevant. It's a credit history of the owner of a company that's relevant. Now, if someone's already got poor credit, then that could be an issue with some lenders, even through a limited company, because they look at the people that own the company. So that could also be an issue. But we were talking about someone that's clean now, and then dirties up their credit for whatever reason at some future date. Good. So good question. There we are. Called Eeps there with a question. Can I use loan money as a 25% deposit when getting bridging finance? Buying through a limited company, can I also mix the deposit with my personal and company loan account? Okay, so let's look at take that in stages. So the first question is, with a bridging lender, are they okay if you borrow the deposit money? Answer, yes. Now, remember a few minutes ago, I said that mortgage lenders are not. So this is one of the big differences between bridging lenders and mortgage lenders. Mortgage lenders won't allow you to borrow the deposit. Bridging lenders don't care if you borrow the deposit. Okay, so first of all, yes, you can. Now, you're buying through a limited company. That's okay. Bridgers don't make any distinction whether you're buying through a limited company or in your personal name, so no issues there. Can you mix the deposit with your personal and company loan account? Well, it doesn't make any difference from the lender's point of view, but your accountant might have something to say on that because you're messing around with the way you're putting money in. So what the normal thing to do is to do a shareholder's loan to your limited company. So if you're putting any personal money into the deal, lend it to your limited company at a commercial rate of interest, and then use just the limited company money as a deposit. But that's really, it's not a lender issue, it's more an accounts issue. And I'm not qualified to talk about accounts, tax, or anything like that. So talk to your accountant about that. My expertise is in finance. So talk to your accountant about the best way to structure money mix between company money and personal money. You're going to do that. But anyway, thanks for your question. But on the main thing, yep, bridges are quite happy for your deposits. Good. Okay. A few more people saying morning. Will says, what about the exit fee? What exit fee? Most bridges don't charge exit fees. So not quite sure what you're talking about there. Will, feel free to elaborate. So just for anyone else, bridges don't charge exit fees in the vast majority of cases. It would have to be a very complex deal for you to have an exit fee charged. Used to, 5-6 years ago, exit fees were common. Now they're not. Why is that? Well, more bridges. So in that time frame, quite a significant number of new bridges have come into the market, and as new players often do, they try and in some way or other undercut the existing players to get a foothold in the market. And one way that some of the newer lenders saw that they could undercut the established bridging lenders was to not charge an exit fee when the established lenders did. And subsequently, the established lenders had to follow suit. So pretty much now, every bridging loan you would look to get doesn't have an exit fee. So if that answers your questions. Now, if you're finding these Q&As useful, whether it's your first time here or whether you're a regular listener on a Monday morning, watcher really, not a listener, watcher, a regular watcher on a Monday morning, and you think, hey, there's a lot of good information there. Well, I've been running these for the best part of a year, and there's over 50 hours worth of these videos. And wouldn't it be great if you had a word search facility so you could just say, if you want development finance or bridging finance or joint venturing or any other thing that you want to find out about, if you could just type in that word like JV, type in the word joint venture, and every time I've mentioned it in the last year, it all comes up instantly. How good would that be, like as a reference? Well, that exists actually, because as I've got a little thing called Fiverr Tribe. So you pay £5 a month and you get a few benefits, discounts to stuff that I do. But you also get this word search facility. So if that sounds useful, then hop over, and I'm going to put a link here so you can have a look at it. And if you think it's worth £5 a month, then feel free to subscribe. You get some exclusive videos as well. Just transferring that over here, just popping that in the thing. So what do you get for a £5 a month now? Well, if you could go down Costa Coffee, you couldn't even get 2 cups decent coffee then, could you? So £5 a month to get access to all the knowledge over these Q&As that I do every Monday morning. Seems like a deal to me. So there's over 50 hours worth of accumulated questions and answers now. Good, there we are. So thanks for your question, Will. Who have we got now? We got the questions are starting to roll in now. So there we are. Good. We had a little hiatus, but now we're back on again. So just want to make sure I don't miss anyone out. So I'm scrolling back through the comments to get them chronologically. There we are, Mitch. Good to see you, Mitch. Currently looking to buy land with planning permission. Okay, good. Can you begin the finance application prior to purchasing the land? You have a portfolio landlord and you're a QS. Will finance be an issue? Okay, so different questions there. So if you're looking to buy land with planning permission, what you're looking at is development finance, as you correctly say. Can you begin the finance application process prior to purchasing the land? Yeah, of course you can. Now, the question is, do you want to borrow any money to assist the purchase of the land, or are you going to buy it cash and a development finance is purely for the build. Development finance lenders will do either. Obviously, they're very pleased if you sink your cash in to buy the site, because now you've made a serious commitment and you've got plenty of skin in the game. Not everyone's in the position to do that, so they will advance money to fund the purchase as well. But they want a chunk of your money in there again because they want to see skin in the game. So, and if you're a quantity surveyor, then that bodes very well for them having confidence in you being able to deliver a new build. So no problem at all, Mitch. And be very happy to broker that for you. I'm going to put a link here. You can just private message me on Facebook, and we'll be very happy to start that process for you. I'm going to find the link and put that in the chat box. So let me get that. I'm going to put that in here. There we are. So you're coming through YouTube, Mitch, but scroll down the chat box and you'll see that there's a link there to my Facebook page. So just I check the inbox there every day, multiple times a day. So just pop your details in there and let's start having a conversation on how we can get that finance for you. But sounds a good one to me. Thanks for your question. Okay, so we've got a Facebook user now. Now, I use a facility called StreamYard that pumps this out into various channels. And one of the conditions with Facebook is that you have to give permission for your name to be used. And if you don't do that, then it just comes up as Facebook user. And I find out who you are when I drill down into the comments later on during the day. Okay, so if you bought a property for a BRR strategy, so that's buy, refurb, refinance, for anyone who doesn't know that, but you want to sell rather than refinance, where do I stand with capital gains tax? You've only had the property for 9 months. Okay, taxation question. So here's my disclaimer. I am not an accountant and I have no qualifications to talk about tax. So let's be clear on that. So whatever I say, don't take it as read. I'm going to give you an opinion here, but don't take it as read. Check it out with an accountant. So based on numerous conversations I've had with accountants over years, capital gains tax is not payable if you've bought and sold a property in under 12 months. Whether it's in your limited company or in your personal name. Okay, why is that? And if you're getting excited now and thinking, well, hey, I've got away tax free. No, you haven't. So, HMRC's view, so accountants tell me, check it out with an accountant for the reasons I've said. Accountants tell me HMRC don't see buying and selling in under 12 months as a anything other than a trading business. So capital gains tax is triggered by the sale of a excuse me, croaky throat this morning, by the sale of a asset, property or any other asset held for the medium to long term. Now, precisely what is the medium to long term is open to interpretation, but under 12 months certainly isn't. It's short term. Okay. So what they say is you're trading. In this case, you're trading property. And HMRC are going to treat that exactly the same as trading any other commodity. Cars, furniture, baked beans. So you sell at one price, or so you buy at one price, you sell at a higher price, and you make a profit. So you pay tax on the profit, not capital gains tax. But if you're doing this in your personal name, income tax. If you're doing it in a limited company, corporation tax. So there we are. Where do you stand on capital gains tax? You don't pay it. You pay income tax or corporation tax. Thanks for your question. we go. Hemi's coming in through YouTube. Good to see you. Can you get a mortgage with a limited company? Yep. There are hundreds and hundreds and hundreds of limited company mortgage products. Now, whether you qualify for them is individually, we'd have to assess your circumstances. But you know, the broader question: are limited company mortgages available? Absolutely, and you know, in ever increasing numbers in the last 5 years. Cool Deep's back with another question. Thanks for that, Cool Deep. Let's see where we're going here. After buying through bridging, can I get the property valued at the current market value rather than the purchase price, as it's already selling below market value? I'm going to jot this down actually, because I don't think I've done a video on this, and I need to. So buy BNB, because I often get good ideas come out of this this Q&A for no work. Right, okay, we'll do that as a video. Okay, but I'll give you the answer here. Okay, so the answer is, as it often begins with, is it depends. Can you get it valued? Will a mortgage lender's value it at the current market value rather than the purchase price because you bought it below market value? The question is, well, what work have you done on it? So what tangible improvements, Cool Deep, have you made to the property since you bought it? Now you're remortgaging it. And if the answer is none, you just bought it cheap, then no, you can't. Mortgage lenders, valuers do not recognize buying below market value in isolation as a valid reason to extend or increase the value of a property above the purchase price made. What works and what they will recognize is tangible improvements that you've made to the property. Usually it's a refurb, but you could have got planning or something like that. So it's usually improvements to the condition of the property. They recognize that and they will increase the value above the purchase price paid. But the onus is on you to demonstrate that. So for example, you bought, and we'll say 100,000. You bought this property at 100,000, but you say it's worth 140,000. You just bought it cheap, low value. So you put in your application saying it's worth 140, but you have to disclose as part of the mortgage form the date you bought it on and the price you paid, so you can see you paid 100 for it. So expect this question from the valuer. Mr. Giselle, you bought this property recently for 100,000, but yet you're saying it's worth 140. Can you show me where you've added £40,000 worth of value by improvements to the property? Please show me. And when you say, well, I haven't done anything, I've just bought it cheap, they'll say, right. And you'll get it valued at the 100,000 that you paid for it. I should do a video on this because this question comes up, not necessarily here, but generally, whether people email me or message me or post it in a Facebook group, comes up pretty much on a weekly basis. Yep, good. So only previous developments are on my own. Yeah, okay. So I get that, Mitch. So you haven't got new build experience. Okay, but what you have got is a professional qualification. So a quantity surveyor, you know how to structure, certainly pricing up builds. And if you've been involved in other projects, they don't necessarily have to mean your own. So you could, to demonstrate your track record, you could cite other projects that you've been involved in. So I still think we're all right, Mitch, and we'd be very happy to help you. Jason's back again. You're very active this morning, Jason. Like to see it. In relation to bridging loans being shown in your credit report, do normal lenders like TMW, BM see this as a bad thing? Okay. They don't see it as a bad thing because bridging loans aren't shown in your credit report, Jason. So you'll never get a bridging lender put their loan on your bridging loan on your credit report? Why is that? Can't be asked. To be simple, to be blunt. What's the point in sticking a loan on there when within a few months you'll have paid it back? So the question doesn't arise, Jason, because bridging loans aren't shown in your credit report. So therefore, mortgage lenders don't know whether you've had a bridging loan or not, unless you're applying for a mortgage to pay back the bridging loan. Of course, then that particular lender will see that there's a charge against the property and they'll recognise the name as a bridging loan. Some mortgage lenders are a bit funny about that, but we've never found it an issue to get a mortgage to pay back a bridging loan. Great. So hope that helps. Tarek, there we are. I had a Tarek that did my Tarek Mahmood that did my training about 3 years ago. Yeah, don't know whether it's the same one. If it is, hi, good to see you again. And if it's not, still hi. Okay, so got 60 grand equity in your property where I'm living. Can I buy another property for 160k through cross collateral bridging and roll up the interest to the end? Okay, so in principle, you could possibly do that. But in practice, the question is, you can't use all, or the reality is you can't use all the equity in the property. Bridges will only go up to 65% less the mortgage. So chances are that 60 grand isn't usable, or the majority of it isn't usable. Now, I've done a video on this, Tarek. So when we're finished here, let me find the video. Go and watch this video. It's all about cross collateral bridging and how it works. So let's find that one. Just popping that in there now. So just popping that in the chat box there, Tarek. So go and watch that when we're done here, and that'll explain to you how cross collateral bridging works. I go through an example of the numbers, so you can, if you know the value of your property and the mortgage, I'll give you the percentages so that you can work that out for yourself, and you'll see if there's any of that 60 grand is usable. My suspicion is that it won't be. Kuldeep says, great help in answering. Good, that's why I'm here. A few more people saying good morning. There we are. So Will's back with another question. When redeeming the bridging loan when the flats are sold? Right, okay, this is your going back to the exit fee. Yeah, don't have to worry about exit fees, Will. There probably won't be one, and if there is, it's likely to be a month's interest in the unusual circumstance that it is. There we are. Mitch is still here. Good to see you again, or still. Is it standard practice for lenders to take their interest from the first capital release? Can be agreed at a later stage of the project. Okay. In bridging, yes, it is. In development finance, no, it's not. So development finance, when you're talking about a new build, buying land, building whatever it is you want to build on it, whatever the plan permission says. Okay. So no, with development finance, it's rolled up interest, Mitch. So they'll roll it up right the way through the project, and you pay it when you redeem the loan, which is either selling or refinancing whatever years you built. Now, because you're going to get stage payments, because whatever the build cost is, if it's going to take you 6 months plus to build it, you don't need that big pile of money sitting in your bank account day one. So they release it out during the build in stage payments, and you only start paying interest from when you draw each tranche of money down. Good. Thanks for that question. So yeah, just find that. So very happy to help you on this. Find that link. Pop me some. Pop me a message, and then we'll start working with you. I'm scrolling through the things. Don't want to miss any questions. So there we are. Let's make sure. Okay, so we've got that one, that one, that one, that one. There we are. Clive PP. Okay, how would you give good receipt to a JV investor, either into a limited company or personally, which was just the best option. How would you give a good receipt? You'd have you might need to reposition that question, but if a JV investor is giving you money, you'd have a loan agreement. So of course the loan agreement would be the way to structure that. You wouldn't just have it on a shake of hands, would you? Limited company or personally doesn't make any difference really, does it? You can borrow money personally, borrow money in a limited company. So there we are. If you want to rephrase that, so I've got a better idea what you're asking, happy to do that, Clive, but thanks for your question anyway. Yeah, okay, great. Again, that puts you in a stronger position. Mitch, if you can buy the land cash and you just want the money to build it, yeah, that's a really sweet deal to a development lender. Yeah, that's the type of deals they like the best. So, Mitch, it's all looking good, fella. All looking good. So let's help you do that. KHUB's here, another sort of regular feature on my Q&As and also on my YouTube channel as well. You pop it up and ask questions. It's good. Can you swap names on a mortgage during the fixed term as long as the new person who is a family member meets the affordability criteria? Well, it depends whether you're talking about your main residence or a investment property. Main residence, you can only do that if the family member lives at the property. If it's a investment property, buy to let or whatever, yeah, you can ask the mortgage lender. They would probably make an admin charge for doing it, but yeah, don't see a particular problem there. Have we got any more? Here we are. Here we are. Here's Danny. Danny Jackson. He's training with me at the moment, quite active as well. So it's good to see him. He's done my advanced training ninja investor program and going out there finding stuff and doing deals. There we are. So hoping to exchange contracts this week. That'd be good. Cheers for all the help running. That's what I do, Danny. When you work with me, when you train with me, I support you and help you push your deals through. And you've got some more plans in the pipeline. Brilliant. Excellent. We'll be happy to help you with them. Chris, there we are. Spoke to last week. Yeah, I remember, I think. Your landlord is going to remortgage from BOI, Bank of Ireland, as they won't forgive a further advance. Need to remortgage another property in June. Will it go against you remortgaging 2 properties in 2 months? No. Don't see any reason why that would be an issue, Chris. And we'd be happy to handle both remortgages for you. So just you've got my Facebook page there, Property Finance Expert. Just ping us a message in there, and we'll get a fact find out to you and be very happy to start help. Now, if you're doing it in June, I'd be starting now. I'd be starting this month, Chris, in February. Because mortgages are currently taking 3 or 4 months to go through. So you don't want to be waiting until about April or May to start remortgaging. I'd be starting this month, February. Be very happy to handle that for you. A few more people saying thanks. Tarek said, have you had any issues with bridging against flats or apartments needing an EWS form? Yeah, okay. So this has been, with Grenfell and all this stuff and the regrettable occurrences there. This it's been a requirement that flats with cladding, predominantly high rise, but not exclusively so, have an EWS form which confirms that they haven't got dodgy cladding. The issue is, so okay, here's the key point, Tarek. When bridges are lending to you, they've got one big question: how are you going to give us our money back? So the question is, if you're proposing to bridge a property and then sell it or refinance it, and it's the same property, how you or your buyer going to get a mortgage on it? Because right now you can't. So if you can't show them a plausible way you're going to pay the money back to them, they're not going to lend you the money. Now, let's just say you had one of these flats or apartments that needed an EWS form, and you've got no mortgage on it, but you just wanted to use the equity in it to finance a flip deal, and you were going to sell the other property to repay the loan. Well, now you've got a more plausible reason how you're going to give them money. So they might lend under that circumstance, but if you've got an unmortgageable property, you're not going to be able to pay that bridging loan back because you haven't got an EWS form. So in that case, Bridger wouldn't lend. Some says, Morning, I've been following you for some time. Well, that's very kind of you. And please keep doing it. There we are. Okay, now, have we got any more questions here? Let's just make sure I haven't missed anyone. I don't think I've missed anyone out. There we are. There we are. PR Max. Yes, I remember you from before. Good to see you again, and thanks for your question. So I want to buy and convert into an HMO. Can I use a buy-to-let mortgage, let out to a single family until such time of an HMO remortgage, and then let out as an HMO, maybe 2 rooms, and then let out as maybe HMO. Okay, so here's the point. If you're going to use it as a single let, then it's appropriate to get a buy-to-let mortgage to do that. No problem at all, because you're not breaching the terms and conditions. Now, when you start to convert it to an HMO, this is the key point, then you are breaching the terms and conditions, because if you said to that mortgage lender, hey, I'm going to convert my property into an HMO, are you okay with that? The answer would come back very firmly, no, we're not okay with that. If that's what you want to do, give us our money back and then do it. So you would need to pay back your buy-to-let mortgage, and HMO lenders don't give you a mortgage for a property you're going to convert into an HMO. They give you a property that's already running as an HMO. So you've got this gap here about that you can't convert it to an HMO on a buy-to-let mortgage, and you can't get an HMO mortgage if you haven't yet converted it. So you're going to have to fund that bit in the middle. So that's either cash or bridging finance. Thanks for your question. Some says here, you actually not only you following me, but you got a question. Great, there we are. Okay, I have 12 buy-to-lets. Well done. What is the best way to build up your portfolio? You're looking to expand. Okay, so well, you could look to see if there was any way you could refinance any of your buy-to-let properties if they're below, 75% loan to value. You could potentially do that. But the best way to build up your portfolio is to operate the buy, refurb, refinance strategy, or as I call it, recycling your cash. So it's the discipline of buying a property that's got potential to add value, adding the value over a short period of time, and then refinancing at the higher level and putting some of that cash back out. Otherwise, you just leave your deposit trapped in the deal, and then you've got to save up another deposit, which normally takes quite a long time for most people, until you can buy another one. So buy, refurb, refinance. So it's buying the right property with the right potential from the right seller, usually motivated to some degree, and absolutely buying it at the right price. You don't want to be paying too much for it. Mitch says, cheers, be in touch. Great. I'll look forward to working with you. There we are. So there we go. Cooldeep's back. There we are. So this property selling is only £5 more than it was sold for in 2006. Today's house is on the street. Do you mean 5 £5,000 more or £5,000 more. But okay, I'm guessing because you haven't put a K on the 5 or the 40, you mean it's only 5,000 more. Okay, 5,000 more. Today's house on the street worth 40 more. How much refurb value will increase the end value of 40 grand? Well, at least 20, I'd have thought. 15 to 20. But does it need it? That's the point, Cordeep. Because you can't refurb a property that doesn't need refurbing. You know, and if you're buying it if it's been advertised on Rightmove, mortgage lender surveyors can get into the back of Rightmove and they can see previous adverts. So they're going to look at the photographs of that property when you bought it and compare that with what you what it looks like now. And if they don't see any improvement to it, you're not going to get the uplift in value. And the fact that it's 40 grand less than other properties in the road makes no difference. But if you want to drill down with me in more detail, then on that, and let me help you on that, then just message me like I was saying to Mitch. Go to the Kevin Wright Property Finance Expert Facebook page, ping me a message in there, and we'll do that. Now, I have a Facebook group, and if you're not a member of that, a lot of people are coming through me not through the Facebook group. So, you know, if you're liking all this, you want to join a bunch of nearly 1,000 other investors, all you know, wanting to push forward and progress. Be good to see you there. So let me give you a link. Do come over and join my Recycle Your Cash Facebook group. Let's pop that in there. Okay, there we are. So yeah, if you're not in the Facebook group already, love to see you there. And thanks for your question, Cordy. Now, have we got any more? There we are. I've got a few more people popping in. It's going to be a long one today, isn't it? Yeah, I thought I'd be off by 9 o'clock, but clearly not. There we are. So Facebook user says, when are your next training sessions starting? In-person ones, the answer is don't know yet. Boris controls that. I don't. But I'm hoping to start in-person one-day trading events, which is the Buy, Refurb, Refinance Summit in April. But the live stream online Property Finance Masterclass, I've got one coming up in about a couple of weeks' time on the 6th of March. Let me just pop that in there. So you're welcome to jump on there. It's $24.91 and we run from 10 till 3. So you get some good content on there. Let me just find that. Actually, I'll just pop the link in there. Let me just type that in. Get my spellings right. Yep. So just if you want to jump on the online one, Saturday, 6th of February, links in there, $24.91. So not going to break the bank, is it? Good. So appreciate your interest. Thank you very much. Tarek says much appreciated. No problem. Kerr McCann, there we are. How you doing, Kerr? Kerr and his business partner Eric did my advanced training Ninja Investor program back in the autumn. So it's good to see you. There we are. So you're purchasing your property cash, always a good sign. Yeah, with intention to uplift it, get a value. Get a mortgage at the 6 point for its full market value. When should you apply for the mortgage to release it as its best? Okay, and you've got to fill up there soonest opportunity. Okay, so, well, mortgage lenders that say you've got to own the property for 6 months before they'll accept an application for a mortgage, you can't apply, you can't put your application in before 6 months. So it's not they won't grant the mortgage until you've owned it 6 months. It's that they won't deal with your application until you've owned it 6 months. Now, if you wait 6 months, you're going to have the widest choice of lenders, Kerr. But you don't have to wait 6 months because there are lenders that will accept a mortgage application before you've owned it 6 months. There's less of them, and the rate probably won't be quite as good. And some of those actually won't even lend at the full market value. They'll either only lend at the purchase price or purchase price plus refurb costs. So your options are more limited. But again, you know how to get in touch with me. So just when you're ready, when you've done the refurb, that's the point. So when you've done the refurb, when you bought it cash, done the refurb, it's looking nice, get in touch and we'll work out your best options at that point, and also compare that to what you'd be able to get if you waited 6 months. So good to see you there. PR Max says, much appreciated, no problem at all. Someone else on my Ninja Impressor program, Jayne, good to see you. How different from bridging loan and variable rate mortgage? Well, quite a lot actually, because they're completely different products. So variable rate mortgage and a bridging loan is probably 3 times the rate. Yeah, but of course they do different things, don't they? So you can't compare them. It's like comparing apple and oranges. But if you've got more detailed questions, Jayne, we're emailing each other anyway, because you're one of my students. So you just fire over whatever you want to know, and I'll help you with it. Tarek says, sorry for all the questions. Tarek, that's the point of the exercise here. I answer questions, so don't apologize. What fees and interest from the bridging loan can we roll up into the mortgage at the back end? All of them. That's the point. Your mortgage pays off the bridging loan. The only time the mortgage won't pay off the bridging loan is if you've messed up and you haven't added the value you thought you were going to add. So because all the bridging lender's got is a charge over the property, and you only get that charge released when you pay them back in full with a mortgage. Okay, and if you want more, if you've got something in mind, if it's just generic stuff that you're just finding out, that's fine. If you're trying to do a deal, Tarek, then message me through my Kevin Wright Property Finance Expert page, and I'll help you with that. Yeah, called it's 5,000 more. Yeah, I worked that out from where you put 5 and then 40. So, and then without a K on the end. So I guess that, yeah, good. Joining the Facebook group, fantastic. Look forward to welcoming you there, Cordy. Have we got any more questions? Yep, there's a couple more still going there. So here we are. Imran, here we are. Good morning, Imran. First time buyer, first time landlord. How long will refinance lender take to get off the bridge? Please tell me best and worst case scenario. Okay, so first time buyer, first time landlord. Almost all buy-to-let lenders have got a block on lending to people in your situation because they just don't believe you want a buy-to-let mortgage. They think you want a backdoor resi mortgage, but you don't earn enough to get it. So you're taking advantage of the relaxed income multiples or clarifications on buy-to-lets to get a main residence property you could never afford to get a mortgage on. So your options are very limited there. But workaround is, and I don't know whether we've spoken before, because I sometimes say this is a workaround. Workaround is that you buy a property with bridging finance, because you don't have to be a property owner to buy a property with bridging. You hold it until the point where mortgage lenders recognise you're not a first-time buyer now, you are actually own property. So how long does that need to be? Minimum 6 months. You're not going to find any lender that's going to lend, mortgage lender that's going to lend earlier than 6 months if that's the first property you've ever owned. So you've got to wait 6 months to apply for a mortgage, and mortgages now, they're taking at least 3 to 4 months to process. So you probably need to allow a year, Imran, on that to be able to do what you want to do and end up with a mortgage, buy-to-let mortgage at the back end. Good. Thanks for your question. Peter, there we are. Good to see you back again. I haven't seen you for 3 weeks. So can you restructure the company shares after completion with bridging? Current shares 80, 10, 10 and 10. Will the bridging lender allow this? Depends. Now, if you plan to do that, then what we would do as brokers is we would ask the bridger up front if they're okay with that, because you don't want to be picking your bridging lender, or don't want us to be picking the bridging lender for you. And then the bridging lender that we've picked, because we didn't ask that question, says, no, you can't do that. So if you know there's a chance you want to do that, then that is part of the upfront information that we've got. And then we go out to bridging lenders and say, look, this could be happening during the time you've got your loan. How do you feel about it? And of course, if there's any bridger that's not happy with that, we don't use them. So it's just a question of being upfront and making sure that you get the right choice of bridger. And of course, that's what we do as brokers. Good. Okay. So still going on with a few questions. And Chris is back with another one. Thanks, Chris. Want to help family members come in with me for their first buy-to-let, but they will have been expats until 2 years ago. Is the criteria 3 years residency? If they're coming in with you, Chris, no, because they're piggybacking on your residency. If they were doing it on their own, then it would be more difficult. But because they're coming in with you on the same deal, then the mortgage lender will more or less ignore their situation in terms of being an expat until 2 years ago and just lend on the basis of you. So, yeah. Kurt, you're doing well. Great. And best wishes to Eric as well. So pass my regards on to Eric. Happy to wait 6 months, really. Thanks for the answer. Yep, fine. I think you'll get better deals, better rates, and a wider choice of lenders if you do wait 6 months, Kurt. Good. Okay, so right now, Jordan's looking like they've got the last question. So I'll answer Jordan's question, and then if no one else pops up, I'll be off. So if you're thinking, oh, I have got a question, you better be quick, because I'm going to be going once we've answered Jordan's question. So thanks for your question, Jordan. Why is my potential new limited company buy-to-let lender wanting to go into greater depths with my earnings when the tenant will be paying the mortgage? Good question. Let me answer it. Because at some point, your tenant's going to leave, Jordan. And then your tenant won't be paying the mortgage because there isn't a tenant. You'll be paying the mortgage. And you'll be paying the mortgage until you get a new tenant in there. And you can't guarantee that the old tenant and the new tenant are going to be perfectly aligned. You could have a rental void. Now, any sensible mortgage lender is going to foresee the potential in the next however many years you have a mortgage or you own this property, that there's a possibility you're going to have a rental void. So they want to find out how adequate your earnings are, that mean that when there is no rental income, are you going to be able to pay the mortgage payment in that month or months if it drags on, or are you going to go straight into arrears? And if your income is severely limited, and that means you're going to go straight into arrears, then you could potentially be a problem borrower and they don't want to lend to you. So the reason they're asking is to understand when you get a rental void, how adequately you're going to be able to cope with it from your own income. That's why. Good. Okay. Well, that's looked like it's about it. So we've come on here for a half hour, been on here for over an hour, but there we are. Happy to answer questions. So thanks for watching this if you watched it live. Thanks for watching it if you've watched the recording or the replay. If you're watching the replay, just stick a hashtag replay in whichever channel you're watching this through, just so I know that you've watched it. So there we are. Good. Oh, we got. I'm not going quite yet because we got some more questions. Good. There we are. So Teo, can I get a mortgage or bridge if I have bad credit? have a full-time job. Okay, full-time job's not the issue. Bad credit is very much the issue. Okay. Mortgage lenders, well, they don't like people with bad credit, but there is some tolerance for that. So what we can say is, with bad credit on mortgages, will you get a full spread of lenders? No, you won't. So depending on how bad your credit is, I don't expect you to put this in this medium. You can message me private if you want, but the worse it is, the less choice of lenders you're going to have. Now, bridging lenders, they don't really care. But remember what I said if you were watching earlier, Bridges' big question, how are you going to pay us back? Well, if you're going to struggle to get a mortgage, clearly that's not a way that you're going to pay them back. So what people with bad credit tend to do is they flip properties and use bridging to buy it. We've helped a number of people flip properties, buy, sell, buy, sell, buy, sell, and gradually building up your cash profit on each. Take that to its logical conclusion. You're going to get to a point where you built up enough cash, you can buy a property without a mortgage. And we've helped people to do that before. So yeah, mortgages are going to be limited. Bridging isn't limited as long as you're selling as your way of paying them back. Good. Thanks for your question. Peter's back with another question. Thanks for the great answer. Glad you liked it. 6-month rule, is it at a point of starting the application or when the loan is drawn down? Yeah, just to be clear, I did say this earlier, but I'm going to make it absolutely clear so you and everyone else can understand it. If a mortgage lender says you must own the property for 6 months to get a mortgage, then they won't look at the application until you've owned it 6 months. It's not the drawdown of the loan, it's the application. So as soon as you apply, if you apply before 6 months, they'll just take one look at that, kick it out and say, come back when you've owned it 6 months. Yeah, pretty simple. That's that. Some says back again. Everyone said buy from a motivated seller or below market value. Yep. And that's because everyone's right. That's what you need to do. Otherwise, how are you going to add value? I find it almost impossible to do that. As soon as one comes on the market, everyone jumps for it. Is it something I miss? To an extent, yeah, it is. You're probably looking at properties that are not in seriously enough bad condition. So there is something you're missing, actually. There's a third point. So motivated seller helps, yes, because you want to deal with someone that needs to sell a property, not just wants to sell it and will wait 6, 9, 12 months to get the asking price or close to it. They're no good to you. You can buy it below market value. That's not a must have. That's a nice to have, not a must have. The real thing is, what value can you add? Now, if you can find a property that you can add significant value to, it doesn't really matter if you pay market value. It's not about the price you buy at entirely. That's important. It's about what you can do. So if it's gone as soon as it comes on the market because everyone's jumping on it, you're probably looking at the wrong deals. Some say, you're looking at deals that need too little work doing to them. Now, the people I train to use bridging finance intelligently and safely, they look for properties, because I teach them how to do it, look for properties that you can't currently get mortgages on. Now, when you go for often known as a cash buyer properties, cash buyer only properties. Now, the minute you start looking at cash buyer only properties, some say, you dramatically reduce the interest in that property, because every mortgage dependent investor looks at them and say, I can't do that. I haven't got the cash. So bridging savvy investors, like the people I train, then they know how to get these deals. So one of the big things some say is, and thanks for following me for some time, maybe you've heard me say this already, observe the masses, do the opposite. So if you're going to buy the properties that you're hoping to buy, you've got to look for the ones that most investors don't want to buy. I can teach you how to do that if you're interested in learning. Good. Kerr says, thanks again, great as always. Good. If we enroll on your course, can we contact you for advice whenever we need? Absolutely, yeah. It's one of the things I do is I call it ad hoc mentoring. So I teach you how bridging works in finite detail, how to make yourself irresistible to agents, how to negotiate better deals, how to price up deals so you never overpay for it, and how to manage sellers' expectations when they reject your offer until they're in a position of until they're significantly motivated to accept your offer. Teach you all to do that, and also how to give a mortgage lender's valuer exactly what they need to give you the maximum uplift value. So loads of stuff, and I want you to once you know the type of deals to find, I want you to share them with me, so I'll make sure that you do good deals and keep you safe. Yeah, definitely. You're a different Tarek, no problem. I'm going to be very happy to help you. So you saw the link to the Property Finance Masterclass, Tarek. If you're around on the 6th of March, then just jump on that link, put yourself in. That's the 1-day event, and that's not the full picture. I can't teach you everything that I've got to teach you on all those subjects that I said in the space of a day, but it gives you an indication. It gives you an entry level understanding of what my training's about. So I can showcase what we do on that. Some said thanks. That's good. Okay, so looks like we are now a little bit later than I thought, but we're now at the end. So thanks for watching this. If you've watched it live all the way through, thanks for spending a fair chunk of your day with me. Appreciate that. If you've come in halfway through, then whatever you missed, you can go and watch the replay. It'll be there on whichever medium you've come in on. And if you're just picking this up at some later point from when I've done this live, you're just watching the replay. Thanks for that too. Appreciate that. I'll be back next Monday at 8:30, and we're going to do it all again. And if you're watching the replay, just stick a quick #replay in there, and I thank you for that. So there we are. That's it. I'm going to go off and get cracking. You're going to get on with your day. Thanks for sharing some time with me. Have a fabulous week, and I'll see you next Monday at 8:30. There we go.